Investors looking at SpaceX are often trapped in the old narrative of rockets and satellites. But look at the company filings and you see something entirely different. SpaceX has built a massive AI infrastructure engine called Colossus, and they are not just using it to train their own models. They are renting that raw GPU power to the largest tech companies on Earth. Alphabet and Anthropic are currently paying billions in lease agreements to access SpaceX data centers. This transforms SpaceX from a cyclical, capital-intensive aerospace business into a recurring, high-margin AI hyperscaler. Our AI research agents trace this pivot from hardware launch to orbital-scale data leasing. You have to decide, is this the ultimate infrastructure moat, or is SpaceX stretching its balance sheet too thin? Today, we rank the layers of their new revenue flywheel from the highest margin assets to their foundational logistics core. First, why is big tech paying SpaceX for compute? The answer is simple: timing. Building a greenfield data center on Earth takes years of permitting, grid upgrades, and construction. Hyperscalers like Google and Anthropic are hitting a wall where their software roadmap is moving faster than their physical infrastructure. They need bridge capacity today, and SpaceX, through its Colossus clusters, has the GPUs, the power access, and the operational speed to provide it immediately. This is not a secondary business. It is a structural play on the AI infrastructure constraint. Second, the economic math. Since the merger with xAI, SpaceX has aggressively deployed capital into its AI wing. Google recently entered a massive deal to access over 100,000 NVIDIA H100 and newer generation chips. Anthropic has signed a multi-year, multi-billion-dollar arrangement. When you aggregate these contracts, you see an annual revenue stream that rivals established cloud providers. SpaceX is essentially taxing the AI expansion of its own competitors. Third, the risk. This pivot requires staggering capital expenditures. Maintaining hundreds of thousands of GPUs is an expensive, power-hungry game. Relying on short-term rental demand creates a different risk profile than long-term government launch contracts. You must watch the duration of these lease agreements. If they are canceled or reduced, the underlying financial model for the AI segment could reset overnight. Fourth, the flywheel. The ultimate goal is not just terrestrial data centers, it is orbital compute. By leveraging its launch cadence, SpaceX aims to move data processing to space-based platforms where solar power is near infinite and cooling is provided by the vacuum of space. If they achieve this, they own the entire vertical stack, from the energy source to the silicon. Fifth, the competition. This places SpaceX in direct competition with traditional cloud providers. While companies like Amazon and Microsoft have the history, SpaceX has the physical speed. Can they maintain this edge? The market is currently debating the sustainability of this compute-heavy valuation in the face of massive operating losses in the AI division. Sixth, the foundation. Do not forget, the rocket business is the engine room. It provides the launch capabilities to deploy the next generation of Starlink satellites, which are essential for low-latency data routing. This is not just about launching payloads anymore. It is about building the global network that handles the data. Seventh, the conclusion. We rank the beneficiaries of this model. First, the compute rental segment, which provides immediate, massive cash flow to fund research and development. Second, the orbital data routing network of Starlink, which creates a long-term defensible moat against terrestrial telecom giants. Third, the launch services business, which remains the vital logistics foundation for everything else. The strongest risk to this thesis? The potential for massive inventory gluts if AI compute demand softens faster than anticipated. We invite you to subscribe and read our full breakdown of the SpaceX financial structure on the floor seats.